Bank earnings story of the day here on Wall Street. Shares of Wells Fargo are higher this morning, now up 1% after beating on the top and bottom lines in Q2 and raising its net interest income guidance for the fiscal year. Joining us here first on CNBC is Wells Fargo CFO Mike Santomassimo. Great to see you again, Mike. Welcome.
Hi, Sarah. Good to see you again.
So what are you seeing that gave you the confidence, especially to boost that guidance?
Yeah, as we said earlier in the year, what we really needed to start seeing throughout the year was what was going to happen to the deposits, both the level of deposits, the mix of deposits between non-interest bearing, interest bearing, and then also any pressures you would see from a competitive point of view in terms of pricing. And so, as we've had more time go by, we've got more confidence that we were able to realize more than what we originally thought. And I think, but more broadly, when you look at the results, it was really good growth in net interest income, which you highlighted, good growth in fees, controlled expenses, sort of drop into the bottom line. And you look at, our capital levels, our liquidity levels, still very strong. And so we were very pleased with the overall quarter.
What about deposit pricing? There's been a lot of talk of that. How is it remaining so low, and can you keep it that low when there is competition? And we've seen deposits moving into places like money markets that pay a higher rate.
Yeah, well, on the commercial side of the business, pricing's been quite competitive now for a while, and I think that'll continue, to be the case. We don't see trends accelerating in any meaningful way, but it's definitely been competitive. On the consumer side, we raised prices last year, at the end of last year, and have really flowed that through to customers. But that's certainly seen less pressure, competitively at this point. But what you're really seeing in the deposit base on the consumer side is people actually spending their money. So the biggest draw on deposits across at least our client base is the activity we're seeing, across the economy, which I think bodes well, for the overall economic environment, at least so far.
Hey, Mike, the street's been fascinated all year long with the drawdown in excess savings, and there are all these projections based on past savings rates. I wonder how you're thinking about that and whether or not it ever truly fully gets drawn down, whether that essentially ends up as a cushion that the consumer keeps in storage because their mindset's been changed by the past few years.
Yeah, Carl, that's a good question, and I think when you look at, in aggregate, the excess savings that we saw, a lot of people think that'll get drawn down in aggregate, by at some point later in the year or year end. I go, but what you really have to do is drill into that a little bit and look at, customers that are either lower wealth or income levels versus, customers that are higher up. And I think what matters most is sort of like each individual situation. And I think the folks that are, on the lower end of the wage scale are already feeling the pressure. And in a lot of cases, have probably already spent that excess savings. And the cumulative impact of inflation over the last couple of years, I think, is definitely having a bigger impact there. And so where you're likely seeing still a lot of excess savings is probably on folks that have higher income levels. And in some cases, that may, as you point out, may be that way for a long time, or, they may recalibrate how much they're going to keep going forward. So, but I do think you have to look at it in both parts of, the consumer base.